Welcome to WealthPath. Our mission here is to help you take control of your financial future, starting with the basics of investing. The name WealthPath represents a journey, your personal pathway to building, growing, and sustaining wealth over time. In this series, we'll walk you through essential concepts to make investing accessible, empowering you to grow and protect your wealth. Today, we're kicking off with Introduction to Investing, where we'll explore what investing is and why it's crucial for anyone looking to build a solid financial foundation. Let's start with the basics. What is investing? It's the act of putting your money to work to generate more over time. Unlike saving, investing uses assets like stocks, bonds, and real estate to help grow your wealth. One of the greatest advantages of investing is the power of compound growth. As Peter Lynch highlights in One Up on Wall Street, staying invested long-term allows for what he calls 10-baggers, stocks that grow tenfold in value. This compounding means gains build on gains, and the earlier you start, the greater your advantage. For example, let's say you start investing in your 20s with $6,000 in the first year and increase this amount by $1,000 each year. If you keep this up with a 10% average return, by your 50s, your investment could grow to around $2.56 million. This path aligns with the FIRE movement, financial independence, retire early, making it possible to achieve financial freedom well before the traditional retirement age. Early, consistent investing can truly transform your future. Now that we understand what investing is and the power of starting early, let's look at some of the main types of investments available. First, there are stocks. When you buy a stock, you're purchasing a small share of ownership in a company. Stocks can offer high returns, but they also come with higher risks, as their value can fluctuate based on the company's performance and market conditions. Next, we have bonds. Bonds are essentially loans you give to a company or government. They pay interest over time and are generally considered safer than stocks, but they tend to offer lower returns. Bonds are a good option for those looking for more stability in their portfolios. Then there's real estate. This includes properties like homes, rental properties, and even real estate investment trusts, or REITs, which allow you to invest in real estate without owning physical property. Real estate can provide steady income through rent or appreciation in property value, making it a valuable addition to many portfolios. Finally, there's cash and cash equivalents like savings accounts and certificates of deposit, CDs. These are very low risk but offer the lowest returns. They're ideal for short-term savings or as a safety net within your investment portfolio. Each of these investment types serves a unique purpose, and as we continue in this series, we'll dive deeper into each to help you understand how they fit into a balanced portfolio. As we dive into these different types of investments, it's essential to understand the relationship between risk and reward. In investing, risk and reward are two sides of the same coin. Generally, higher potential returns come with higher risk. For example, stocks can yield significant gains, but they can also experience sharp declines, especially in the short term. Bonds are typically less risky, but they usually offer lower returns. This balance is why many investors hold a mix of both, stocks for growth and bonds for stability. Your risk tolerance is a personal factor that plays a big role in your investing decisions. Younger investors with a long-term horizon may have a higher risk tolerance, allowing them to ride out market fluctuations. On the other hand, those closer to retirement might prefer more stable, lower-risk investments to protect their wealth. Understanding your own comfort with risk, as well as your financial goals, is essential in building a portfolio that works for you. Investing isn't a one-size-fits-all approach. It's about finding the balance that aligns with your personal situation and goals. In this video series, we'll guide you through strategies to help you find the optimal balance between risk and reward, so you can make informed choices based on your unique financial situation. Today, we covered the basics of investing, what it is, why starting early can have a huge impact, the main types of investments, and the importance of balancing risk and reward. Remember, investing is a powerful tool that can help you achieve financial independence over time, but the key is to start with a strong foundation and make informed choices. If you found this video helpful, be sure to subscribe to Money Mindset and turn on notifications so you won't miss any future videos in this series. In our next video, we'll dive deeper into one of the most popular investment options, stocks. We'll explain how the stock market works, what to look for in a stock, and how to start building your own stock portfolio. Thanks for watching, and I'm excited to have you on this journey to building a solid financial future.